Good evening. This is the Elliott Wave daily update for the Nasdaq 100 and the S&P 500 for Monday, December the 30th, 2024. And I'm going to begin on the Nasdaq 100 here on the futures market. Let me just kind of bring this down a little bit so that we can see the full count. I'm on a 4-hour chart, and basically I just kind of wanted to show the progression that we've done thus far within what I'm still looking at as the beginning stages of an intermediate fourth wave. Now, I wanted to make sure that I continue to show this box, which shows that lower level that I anticipate that intermediate wave 4 will come down to, if not exceed, but at least come down to that level. And again, as Elliott has taught us over the years, that a fourth wave in motion will find its terminus within the price territory, normally at its terminus of the previous fourth wave of one lesser degree. And since we're counting an intermediate, one lesser is the minor, and there's the low right there. And that low is 17,893. And so that's quite the drop. We are still trading. In fact, all day today, we traded above 21,000. But as anticipated, the market continued the decline. So the year end seems to be now just really finishing up and a lot of scoring away, a lot of positioning going on. And today, I think that the market would have been down a great deal more, but we had the NVIDIA of all stocks. NVIDIA ended up on the day and did catch a bid for pretty much all of the day, all of the trading day today. And that tended to keep the market up. Also of note, as I had talked about over the weekend, particularly yesterday, because that's when I did the Nasdaq, that I said that the moves themselves are going to pick up some volatility. And what I meant by that was not necessarily volatility pumping up in premium wise, but volatility in the speed at which a move, we're going to get these larger moves, not only to the downside, but once that group or that seller was finished, it left kind of a vacuum. And if a buyer were to step in at that particular moment and need a bunch of futures or just have a larger order to fill, the market could very easily just swing very quickly to the in the other direction. And we saw that. We saw that a great deal today, both on the opening rotations and then during the day, and then again towards the end of the day. Now, what do I want to make of all of this? Well, I actually still believe that we have A and B, and we're in a C wave down. Now, whether this is the point that I got to continue to make, that we can see on the 4-hour chart, that's the low that eventually the wave C needs to break. And that low is at, I got to get this right, 21,006. So 21,006. So I'm looking for the C wave to break below 21,006. Well, I kind of marked it in, and now we're going to drop down to that hourly chart because it just makes it a lot easier to see the move itself. Again, folks, I'm working on, it's a new laptop, but it's just an Apple MacBook Air and great computer. But it doesn't have the screen size that I have in my home office. So here we are inside. Now, what I'm doing here is basically saying, okay, and this is where the difference is going to come in. So you have to kind of hang out with me here while I kind of go through all these motions and I actually count this initial wave. Because what I can see is I got a 1, 2, and then I got a 3 down to here. That's 1, 2, 3, 4, 5 down to here, and that's a 3. And then this is a 4. Oops. See, that's a very sensitive little mouse. And then, so if we have 1, 2, 3, and then 4, and then what I'm connecting is wave 1 to wave to top of wave 4 to give me where my clues are for this fifth wave. So in essence, that we ended up, and we're doing it still right now, that the market is continuing to just kind of fill in and sell a little bit here. And in fact, it's now done as I look up and see that it is 5 o'clock Eastern. And so we ended up buying it up, and then within the last hour, bringing it back down again. And of course, that started the last hour of trade, and then the after hour also brought it down even more. So the selling continues. And again, tomorrow's last day of the year. So here's what to expect. Do I really think that, 6,055 is still going to be in the picture? Well, it would be quite the intense move, and I will go over that more when we get to the S&P. But if the S&P is going to take off and there's going to be stocks that are going to be within the Nasdaq that are going to be contributing to it, and so we'd be expecting this much larger move. Here, if we're looking at it would be a move back above 22,000. So that would suggest that, and well above 22,000, let's say. And so we'd be looking for this move to bring us back above that high, which is 22,108, I believe, 110. Now, can that happen? Well, can I say no? I cannot. So right now we're finishing the day closer to 21,000. In fact, let's just take a look. Our close is 21,388. And we're looking at 22,110. Ah, can it go 700? Sure. We saw it last week. Saw it right here where the market actually went down 800. So can it go up that and finish up there at that 60.55 in the S&P, equivalent here in the Nasdaq, somewhere around 22,000 plus? Yeah, I suppose they could. But there's so many other things now that are coming into play for year end, last trading day of 2024. But it's going to build more towards where do they want to now peg it on January the 3rd. That's the next weekly. Now, within some of the ETFs, within the indexes themselves, like the SPX, the NDX, the NQ, the Qs, they do have an expiration tomorrow. So where will they want to peg this? I see that the SPX or the S&P actually, but if we take a look at the SPX, we can take a peek to see where did the SPX finish today at 5906. So 5,900, I believe, is going to be, or still would be, and it broke below it and then recovered it. Was just where there was gamma collecting. Now, to tell you the truth as to whether or not it was actually a put wall. I know there was a put wall down there somewhere, but we have to look to see. Let me just kind of take a quick look because I think that it might be out, but I want to see for today. And so I'm just going over to my levels here in the SPX. So that put wall was actually at 5,900, and that got they traded through that gap through it on the opening this morning, and then they closed right at it pretty much this afternoon. So I think that we could likely consider it to be broken, and I want to take a quick look to see if indeed we might have the evening out, and we do not yet. So again, part of the new service that's going to be starting on January the 6th will be these levels. So, and they will be included the evening before, so my afternoon update, and then again reviewed and put into the Discord server. So there'll be a Discord room that all members that are joined through the membership here on YouTube would have access to the Discord, and that's where we'll be putting alerts and some intraday updates. So again, both of those things, if you go back to the video where it was the introduction to memberships, there's a lot of information in there that I go over as to what will become available and what the individual costs would be. Now, back to what happened today. 5,900, I say, would remain pretty active for right now. Now, if it kind of starts keep coming down and it breaks significantly below that again, then we the market, I think, is just returning into trouble. Now, I will get additional levels down below because what came out this morning only really took us down to 57, 5,800. And and that's a level that's combining both the spiders and the SPX. And it would have been a level that would have created an additional stronger downflow. So with all of that in mind, we'll get those revised levels for tomorrow to see how the options all traded and what got closed out today and how that's all going to affect where we end up tomorrow. Now, again, in the SPX, the put wall that belongs to the JP Morgan collar, right? The call side's at 60.55. The put side is at 54.50. It would be a massive decline. And for the S&P down 400, not since I've been around. I think I may have seen something similar that may have happened during COVID, that COVID slide, or it may have actually happened in the great financial collapse of 2008, 2009, but it's not coming and jumping out into my head right now as that it did. So it would be a very, very large move. It was down over 100 this morning. So again, 5,800 would also represent a level of where there would be gamma. So we would expect if it decides to break there that we could get another little bit of a slide through. All right, so back to the Nasdaq. What would that suggest for the Nasdaq then? So let me go back and just kind of take a look at the NDX. In the NQ itself, I have levels that actually are going down to, well, 20,992. And in the index, it was in the NDX, that would equal 20,743. Now, right now, if I kind of bring this up a little bit, we're going to see that with the fibs that are in line, we're looking at 20,927. So 20,992, well, if it kind of goes through that, we'd be looking for the NDI. I mean, we'd be looking for the NQ to break that, and then could very quickly drop down to 20,927 just by breaking that. It's the Qs and the NDX and the equivalent level as it appears in the NQ. So there's about 20,990. I could get a quick slide and then maybe recover off of that. So what I'd be looking for here is 5 waves. So I'm looking for that fifth wave to be completed. And right now, the 100% is 21,329. But again, we're looking for wave 5 to complete below 21,253, which was today's low. And the next one right under that is 1.618 at 21,175. Below that is where we have that 20,927 level. And that for sure could actually come into play tomorrow if we have another seriously strong down day. Now, I would think, can't say right off the top of my head if there's going to be this big involvement again in NVIDIA, whether NVIDIA will again carry the long side and bring the market higher. Along with that, of course, then we started to see some buy-in again within a lot of the other stocks. Now, understand that I view that most often as it's hedging. It's dealer hedging. And it could be from put selling. And so the dealers are buying the puts. The dealers are selling calls. And so if that was taking place in NVIDIA, well, then the stock's going to go up. So again, so today we might have seen a combination of that. And in its own little world, NVIDIA had its own risk-on type trading today. And but it didn't hold. It didn't hold. Stock ended up closing just up 48 cents. It was up well over $2. I think it had gotten up above $3. And even after in the after hour, it's down about 50, 60 cents, something in that area. So if they continue to just go like, okay, yesterday was yesterday, today is today, or tomorrow is tomorrow, and they just start to sell it, then it will contribute stronger to that downside move. Once complete now, that's where the big challenge is going to be. Because again, right, I'm looking at minute, minute. If this is going to be minute C, then I'm going to say that it's minor A. So what does that then suggest? That then suggests that we have a B wave that likely not necessarily is going to go, we'll do our fibs on it, but probably come back up to here, maybe get up a little bit higher, but not necessarily be a flat. If I'm looking at this as 1, 2, 3, 4, 5, then it's a zigzag. And if the B wave does not have to be a flat, the B wave could then also be a zigzag and maybe get only back up to 382, 50%, maybe 618 of wherever this C wave comes in. And then we balance that against with the whole structure. But then if it's an ABC on a minute degree, then it's going to be minor A. If we get a total blowout to the downside tomorrow and we start breaking lower to these levels, then we're really starting to look at that it's a part of that this being 5 down would be one of C. And then I could flip that again to minor A, minor B, we're in minor C, and this would be minute wave 1 of minor C. So those are the two counts that I'm really looking at. Neither one of them is actually suggesting upside, right? Other than we get to finishing 5 waves down, if it's going to be minor 1, or excuse me, minute 1 of minor C, then we're looking at something totally different, right? Because then we get a wave 2, but it would be at a minute degree and not a minor degree. So that's kind of the coin toss that I'm looking at right now. What's it going to be? Are we going to do an ABC down, call it minor A? We got a minor B, or are we going to up this to minor wave A here, minor wave B here, and then minor wave C coming down? That minor wave C would be totally expected to reach this lower level. This is all part of the discussion they've been having on the weekly and also during and here on the dailies as to we're still looking for the overall move to end up within that yellow bar that is housing the minor fourth wave. So we're looking for intermediate wave 4 to complete at the terminus or the within the price territory towards the end of it of the minor fourth wave. And that's 17,000. What was it? 17,000. I think this level. Nope. Got to keep going. This level, 17,983 is 382. And that would actually take it to that bottom, to that low. And we saw in August. But then I would move this up to minor A, minor B. But we could start dropping significantly. I mean, again, we're going to have to keep it alive because if I'm only looking for it to come like down to 20,927 and to finish this 5 down, then the coin toss is, well, is it minute C, minor A, or is it minute wave 1 of minor C? These are our choices. This is what I'm looking at right now. And now we have to allow the market to trade and determine. Now, overall, though, we would, even if it's an ABC on a minute, we're going to call it minor A, we're just going to get an ABC back up in a minor B. So again, we get a rally and we would work out our fibs. But if we hold at 20,900, let's say, into that area, without breaking back substantially and ending up at 20,578, well, then I think we have a fair chance of getting up to 22,500, maybe even 22,300 over the next week or so. Now, remember, tomorrow, last day, Wednesday's a holiday. Now, as I read on the tape today, that January the 9th, the markets will be closed in observance of former President Jimmy Carter's death. That'll be a national day of observation of mourning. And I believe that's also his funeral. And I believe it'll be a state funeral, which means that it'll be taking place up in the Capitol. And then maybe then, of course, going down into Georgia for the actual funeral service. That's my understanding. But I know that on January 9th, I saw it on the announcements today on the market wires, that January 9th, the exchanges will be closed. The equity exchanges will be closed. I would assume that it kind of includes everything else as well. Undoubtedly, there's going to be a Globex. So that will take place until the morning of the 9th, but our regular session will not exist. So we've got January the 1st, then we got January the 9th, and then we have January, I believe, when Martin Luther King's birthday. We've got that coming in January too. So we have 3 days of market holiday. And that could have a play in how this all kind of pans out. We're going to take it day by day, and we will see. Now, let's take a look. We'll go out to the daily because that's where I like to check in on our moving averages. And let's get that open there. And we can kind of see, there we are, that here's the 8 turning lower. Here's the 20 turning lower, both, right? Kind of opened and they dropped. And then once it broke the 20, we started to pick up some speed. It broke the 50. It picked up some speed, but managed to close back above it. So we'd be looking for that clean break of the 50, and then it keeps going. And I'm looking that, the C wave should come down and put a new low in below the wave A. Wave A finished at 21,006, 20,927, good candidate. If it kind of doesn't stop there, where wave C would be equal to wave A is down here at 20,578. That would kind of maybe take us into the beginning of January, possibly. I really, again, I can't say with 100% certainty never going to happen, but it's not something I'd actually be looking at for tomorrow since we finished the day above 21,000. So 21,005, oof, big drop. Can happen, not necessarily looking for it. All right, let's go take a look at the S&P. My goal is to try to keep these on a reasonable amount of time. And so we're on the daily. I'll come down to that 4-hour. And again, open it up so we kind of can see how it is in terms of this box. And so let me bring it down just a little bit. There's the 3. 1, 2, 3, 4, 5. Wave A, B, C, wave B. We're coming down in that C wave. Now, wave C would be equal to wave A at 57.88. Today's low, which we blasted up off of, by the way, was 59.18. So it was the SPX that gapped below 5,900 this morning on the opening. So actually just overnight because it already was well below it. And so, but it was recovered. The SPX goes to 59.06. I'm kind of suspecting that when we start to reopen, or at least back overnight, that we're going to end up back below 5,900. I don't know what levels are going to be existing at 5,900, if there will be. Very well could still be some levels right there. And 5,900 would present some gamma level. And it likely is going to be via the puts. So it could be another interesting night, and then early of our session tomorrow. Again, last trading day of the year. A lot of marking is going to take place in the indexes, in the ETFs, and within the individual stocks. So it could be high volume, which I think it might be, or just really boring, which it also could be. But I'm not relying on either one. Heavy volume is what I think, actually. And I think volatility, in other words, the speed of how these indexes will move, will be what is really in control. Let's come down to the hourly chart and let's take a look inside this move. So again, let me just pull this down a little bit so we can see. There's the 5, there's the 3, intermediate wave 3. Minute A, minute B puts us in a minute wave C. And I gotta say, I'm kind of thinking this could be wave 1. This could be wave 2. Wave 3, I'm still in motion. So maybe, I don't know, but maybe we have a 1-2, 1-2 type of a situation, which would put a lot of pressure, a lot of downside pressure on the SPX and the ES and the spiders. So it will be interesting to see how these levels will show up tomorrow. Now, again, as I just mentioned here, that what we have in the SPX that was this morning, I don't necessarily have tomorrow's levels just yet. Often I do. They usually come out about 5 p.m. Let me just double check because maybe they are out by now. Nope, still not. But I could go, yeah, if I need to check and then, but nonetheless, I'll have them tomorrow morning. And again, as I said, these are part of what I will be including. But right now, 5,900 this morning, large gamma position there, and it was also the put wall in the SPX. Both got broken along with the ES, which was the equivalent was 5,951. Both got broken. What we have underneath that was 5,800. So that would be the next. It's actually 57.98, 58.49 in the futures market, and that would be the next level to on coming off. The low today, we in the futures market held pretty much well above that 58.50 level. But we don't know. Tomorrow it might just make it. And if it does, well, then we got a story to tell that possibly could be a completion point for a C wave, which actually, if I look at it on how we've got it set up, the 100% where C would equal A is 57.88. So if I'm just counting this as 1, 2, and 1, 2, 3, 4, can't be because you see it overlaps. So we got a lot of going on, but I do think that there's some additional, and I'd be looking for it to break below 59.16 at least. And eventually I would looking for that C wave to break below 58.66. So again, 58.50 fits that. And that we know here in the future that it also is a combo level, which is nothing more than representing a level that is congruent between the spiders and the SPX, and this is the equivalent level within the ES. So we're going to be talking, we're going to be looking, we're going to be seeing, but I still believe we still have additional downside. We saw the SPX actually, we saw the SPX was down over 100, and the ES was down over 100 at a couple of times this morning. So, and then got bought back up, which is just the way the markets function. Now back over here, let's take a look. So it's a little more different to count because you see how tiny that is right there. So it becomes a little bit more difficult to try to think, is that 1, 2, 3, 4, 1, 2, 3, 4? So we're going to come down and finish that fifth wave. That kind of works for me. Again, 58.50 would be a good support level that would come into play there. We don't have anything here. That A wave was so strong that we don't even have price support levels, price point levels. So in fact, we sort of reached one today at the low. So, and that low again was 59.18. So again, I'm looking for it to come below that. I'd look for that C wave to come below 58.50. what was that one? 58.66. And below that, we have 58.50. That still fits. And that is just a combo level from spot gamma. It all fits. And in that case, I'd be looking at this to be possibly a 1, 2, and that's a 3 and a 4, and that's 1, 2, and the fifth wave is going to be the extended wave. So let's see what kind of happens tomorrow. Again, we are confronting the same discussion as I just had in the Nasdaq. Is this going to be minor or is it the minute? If it's ABC minute, then we know that this is minor A. We get a minor B, and we still have a minor C. So the whole pattern itself. Now, I'm kind of deciding that likely it will carry us into the beginning of January. At least we're going to see, Thursday and Friday, second and the third, and then again into the following week. What's going to disrupt it is Monday is January the 6th, 7th, 8th. Thursday, January the 9th, the markets are closed. So a lot going on. Let's take a look to see, I think where we might have some numbers. And let me just take a quick look. I just got to pull them up real quick and see if I can get them. There they are. We're going down to economic calendar. I always go to Market Watch, by the way. I use Market Watch. They're pretty good at telling us. Today we had Chicago Business Barometer and pending home sales. Tomorrow, nothing. Although it might have a little bit of a kick. It's the S&P Case-Shiller Home Price Index. And being that I live in San Francisco, home prices are not doing not doing very well out there at all. So, maybe some of that'll kind of spread to other areas, but we'll see. But that's it. And then Wednesday is, of course, New Year's Day. And then on Thursday, we have initial jobless claims and construction spending. Friday, ISM manufacturing and auto sales. So that is going to be it for today. And the next update will be on Tuesday, January the 31st. We've made it, folks. We've made it another year. Next update tomorrow.